All right, good morning, everyone. This is Franco Cho with your morning update for the Mr. Top Step Trading Room. And what I'm seeing here, I'm starting off with the NQ right now, and I'll have this video posted as well. But the NQ, um, yesterday above 34.20, that was a big time smoke screen we saw up there. We got above 34.20 and put in a tail on a higher time frame, and that was the level that I talked about at the midday report, and also the phenomenon I talked about prior to the market opening. Basically, I thought that if we got above 34.22 and couldn't hold that level, you'd see a big slam down. That's what we saw right out of the gate early in the day. And then by the afternoon, we could not really get above that 34.20, and that was the last nail that kind of led to a huge sell-off back toward those 33.80s. So the NQ here, 34.20 is above that zone, big time resistance right now. But more importantly, we broke back below 3400 and 3390. That had been an area of resistance before, and then once we broke above that zone, obviously it became support. So now when we broke back below it, we're holding below 3390. Right now, 3375 to 3390 is the early area to watch. I think the big time zone below obviously remains 3360, on a retest, but 3400 continues to be a major pivot in the charts, and breaking back below that zone and holding 3390s indicates at least short-term weakness until we can push back above 3390. Right now I have primary upside targets at 95 half and 34.05 quarter. Those are the two near-term targets. On the downside, I have 3070 half, 3370 half, and 3360.75. So 70 half and 60.75 are the two primary downside targets short term. So for the ES, this one also another one that got one tick within 1 tick of that 1800, and then we saw a slam down. Hasn't been a huge pullback, 15 points off that zone, but still a pullback nonetheless, breaking the minor uptrend that we had going on. But overall, this remains very bullish. Breaking beyond that 1775 was huge. That had been double top resistance. We broke above that zone, rallied another 25 handles up toward 1800. So I think a retest at 1770 to 75 could be a big time zone to watch here on a higher time frame scale. If price pushes back into that 70-75 zone and finds buyers, that could be a great spot to get long for a shot at new highs, or at least another push to 1800. A break below 1770, in my opinion, would lead to much more weakness back toward 1750s or lower. Obviously, I've been pounding the drum on 1735 for a very long time, and as long as price remains above that 1735, the overall uptrend remains intact. It's how far will we pull back, and the pattern all year long is pull back and see more buying to new highs. So we've had an afternoon of pullback. How much more do we get? I think if we get down into the 70-75 zone, it could be a great swing long type of opportunity. Until then, I think the short-term zone to watch is going to be 84 and 92. So in terms of targets on the upside, I have short-term upside targets at 93 and 97 quarter. And then on the downside, I have 82 half and 78 quarter. All right, looking at January crude here, crude oil. This one has a very, very clear trading range. Down as low as 93.20 up to 95.70. This range has been developing over the last couple of weeks, and eventually a breakout from this range could spark the next 3 to 5 point move. But for right now, the play is within the boundaries. You see crude is opening up already 5 minutes into RTH, and we're getting strength off the 93.20 to 93.40 zone. That was a support area I mentioned yesterday as the biggest support on the chart. Was 93.20 to 93.40. That support level held all afternoon and overnight, and currently right now we're starting to push up toward the top end of that zone. I think if we can break above and hold that 93.80, that would be the first sign that we could push back higher within the range. So right now, I think 93.20s to 93.40s is big time support. We continue to hold that support, then we can get back toward the upside targets, which right now I have 94.38 and 94.77. Those would be the upside targets. I think the only way we break out of this range is if we cross below 93.20 and hold 93.20 and 93. In that case, I think we're, obviously much more weakness ahead. But for right now, batting the ball within the range. All right, that's all I have for right now. Jack's up.